Are you going through divorce with an ex who owns a business, or are you part of a business that you've been in for a long time, and now that divorce is coming up, things are seeming a bit odd? Today's episode will be perfect for you because we're going to be talking about the 10 tricks business owners use during divorce and how you can outsmart them. That goes for entrepreneurs as well. Welcome, Mum.
Hello, Laura. Hello, everyone.
Hi, Mum. So today's episode, just a reminder, Mum is not your lawyer. And I'm not a lawyer. This is just a general education discussion. And of course, this may not happen to you. We're just discussing things that we have seen in the past and Mum has experienced going through with her clients. So let's get to the jingle and let's get started.
Hello, I'm Laura, divorced mother of 3, and I'm here with my mother, Lynette Galvin, with 35 years experience in family law. You're listening to the Divorce Course podcast. Through our candid discussions, we hope to help you through your divorce or de facto separation. We will be answering the most commonly asked questions and covering the stages and steps that you will face on your way to freedom.
So, Mum.
Yes, daughter.
We hear about this a lot.
Yes.
We hear where people are either in a business with their ex, they're breaking up and everything's just falling to pieces. Or we hear of people who aren't in businesses with their ex, but their ex has a business. And the fact that they have a business is making the divorce process, the property settlement, the kids stuff, a million times harder because of all of these nasty tricks that we see.
Yes, absolutely.
So how often, before we get into these 10 tricks, how often do you see these kind of things happening?
Pretty well all the time. Australia, last time I looked at the stats, we have the highest rate of private ownership of businesses and self-employed people in the world. So we like our autonomy. And so it comes up quite.
Okay. And I'm going to acknowledge that there are people who do have businesses who are trying to do the right thing. And I know there are a lot of, because I was in the women's entrepreneurial world for a very long time, there's a lot of very successful women with businesses and they're just trying to do the right thing and get through their divorce. But we do hear of these nasty tricks. So we're not saying every business owner does this. We're not saying every entrepreneur does this, but we are talking about these tricks. If you have a business and you're trying to protect it, we do actually have an episode about what happens with businesses and divorce that I'll put a link in the show notes for. Yeah. But these are the 10 tricks. So hopefully, if you hear one of these and these applies to you, Mum's going to give you some tips on how she tries to outsmart
Well,
them.
I think it applies to people who are just going through property settlement, not because they may get the wrong idea of what things they need to look at, or the person who's making disclosure might not understand. So I think it's handy tricks for anyone dealing with a business.
So let's look at these 10 tricks business owners use. Number 1, the top one that we see, the most common one that we see is they make their business worthless, run it into the ground. Yeah. They say, oh, it was a $10 million business, but now it's only worth $2,000. Or, oh, it was a really good business, but now it's worth nothing. Yeah. And to someone listening today whose ex is saying that, all of a sudden their property settlement goes from a big property pool to a nothing property pool, a nothing burger, as they say. And the frustrations they must be feeling, pulling their hair out going, I've looked after the kids, or I've been involved, I've helped with this business, and now I'm going to get nothing out of it from a very long marriage or de facto relationship. How frustrating that would be. Mum, so what kind of things can people do about this?
Yeah, Laura, they also worry because the business usually has a value, the house has a value, and often the non-business owner is hoping to get the house in property.
Right.
And so, but when that business goes into receivership or just gets worth, then the house has to be divided. That's what's so sad about it. But yeah, I've yet to see a business that spontaneously flourished after separation. But to be fair, there are people who are so distressed at the breakup of a relationship that they can't function properly. And entrepreneurs and business owners need to be truly present. The business stay profitable. I'm not talking about those people. We're talking about the ones who deliberately run it into the ground, maybe give stock away, maybe start taking big, long holidays, maybe sacking some staff, maybe letting the contracts go to someone else.
So, Mum, what do people do? And because we've got 10 to go through, what do people do if their ex says to them, they are about to go to mediation, they're asking for disclosure, and their ex says, oh, the business is actually worth nothing.
Okay.
it's no longer worth anything.
Yes.
How do they go to mediation to talk about property pool when they're saying that?
Easy. You get a valuer for the business as it was on the day that you separate it or a period before. You get a valuer to go in and have a look at the old books and work out what that value is. And then if the business still exists, they can work out what value the business has today. And then they've got a benchmark of what wastage has happened. And as we know, since the new amendments under the Family Law Act, and notwithstanding the case of Shinohara and Shincourt, how much was wasted by a person, and adjust the rest of the property pool in your favour accordingly and lower their share accordingly. Anyone who's getting Shinohara and Shinohara waved at them by the other side, just remember the case of Shaman, isn't it? SHAMAN.
And can you explain that case?
Yeah.
The Shaman and Shaman.
Yeah, so it was a full court decision. And they said, can't do add-backs anymore because Shinohara says we can't do add-backs anymore. But that doesn't mean it doesn't get taken into account. So then the court will look at what has been wasted and probably put a dollar value on that. And then as a result of putting a dollar value on the wastage, they may give the person, what they ended up doing was there was a $3 million roughly property pool. Hubby took out 1.4 million, something, left about 1.6, 1.7 million. He'd given the money to everybody, like to his family, put it into overseas, it just gone. The rest of the property pool, though, was roughly equal to what the wife would have got had the money been still there. So they took into account 7950, I think, which is like other facts that should be taken into account. And they said, look, you've got that money. Now we're going to give, they practically gave all of the rest of the property to the wife.
So she got pretty much like 80 or 90% of the left property pool.
I think it was even more. But
pretty much all of it.
And he got hit with an order for costs for her and also to give her another $400,000. So it didn't end well for him, really. And so everyone's leapt on Shinohara, which was the first time the court looked at the issue of add-backs since the legislation changed. And in there they said add-backs are dead. And every young lawyer in Australia has leapt on that.
I sent you a TikTok today of a young lawyer on TikTok, and she was saying Shinohara means add-backs are dead, and so wastage doesn't matter anymore. And I was like, that's not, I'm not a lawyer, and I know that's not true.
So anyone who's got their lawyers saying that to them, you just show them that case. We'll put it in the show notes.
The show notes.
Yeah.
Okay. All right. So good news is if your ex is saying it's worthless, mum says get it valued on the day you separated, get it valued on the day it is now. Look at how much they've wasted, or if you can prove they've done that on purpose, and the courts may give you an uptick to make up for that.
I don't think you've got to prove they did it on purpose. I think they've got to prove that they didn't.
Oh, that's even better. Yeah. Okay. All right. Next one, Mum.
Yes.
Setting up a similar business and taking assets and clients to that new business and saying that other business had nothing to do with this business.
Yes.
So let's just run that through. So the ex is thinking they're being sneaky by saying, oh, no, I shut that business down. It's worthless. But they've just secretly moved it all across and given it a new name.
Absolutely. They've kind of set up a mirror company or business and moved all the clients.
Do you see that happening a lot?
Yeah. Sometimes people do it because they can't get control of the bank accounts for the business and they're worried about their staff and they set up a clone business. But that's been happening forever. And the court, of course, the new business gets valued anyway.
Okay, so this is a quick one. Good, because we've got 10 to get
I know
through.
we'll be 8.
So if your ex creates a new business and says, no, we separated, this one has nothing to do with you, it still has to get valued and looked at.
Because it's the value of the assets at that you divide the property. So the case for that is Woodland and Todd.
Okay, you can't stop them from doing it though, can
No.
you? You can just document that they're doing it.
Yeah. A person's entitled to make a living.
But if they're doing it to try and hide and manipulate, then good luck.
Good waste of time.
Yes. Okay. All right. Number 3, appointing additional shareholders. So we hear people freaking out about, I was a shareholder and I can't get access to this information. We do hear these kind of things a lot. So can you explain this trick where they appoint additional shareholders?
Yes. So you may think you own half of a business, right? You've got 1 share, your ex has 1 share, and that's 50% of the business. But if your ex has the power to issue more shares, and that will be in the articles of the company if they're allowed to read the set account, then they may issue another 25 shares to themselves or another 60 shares to themselves. And suddenly your percentage of the business that you actually have shrinks. Okay. And I see that happen a bit. A good way around that is to do this. Look at company searches, look at historical searches, and look for your name. We show you how to do that.
In the course. But so do the searches. What do you mean do the searches?
You can Scitech, I think we're calling it Confirm, isn't it?
It's confirm.com.
Or
we don't get paid.
No, we don't know that. Okay.
We're just saying it. And this is for Australia.
Yeah. Or go straight onto the ASIC web, Australian Securities and Investment Commission or something.
Commission, yeah.
And put your name in and do a personal name search, put your name in and then ask for the historic records with your name. And that will show if you've been in a business, what's happened lately. It'll show you current and what happened in the past. Then do one in their name as well. And then do one for the company. And you've got everything you need.
So I've heard of people using confirm.com and finding some interesting additional things when they type in their ex's names.
Absolutely. And you can use the same tactic for pretty well everything. Look, do the searches.
Okay. So a lot of lawyers do that. That's usually what lawyers do. They do those searches.
I wish.
I wish. You wish they did it.
I wish.
That's what you do.
Yes, that's what I do. But you may need to your lawyer a little bit and say, look, can you do a personal name search for me and one for him and historical and current? And sometimes they'll put the shares or the new business, they'll slightly different date of birth when they register or change a little bit. And it might not come up in the search. So you need to try a few variants because I've found some amazing things when I go very broad with the search.
Can I ask, though, if they do add these additional shareholders, how do you get your proper share of that business?
It's usually a sham transaction. The court can set it aside under a Section 678 declaration to set it aside. But another way of looking at it is you used to have this much in the property pool. You had half and he had half. And as a result of his actions, your share and his share are now only worth this much, right? Because there's 24 other people in it. And find out what the value was before it got split up and then look at the value of your combined shares now. There's his wastage or her wastage.
Perfect. Okay. And then you argue the wastage and
you do.
Shaman and Shaman.
Shaman and Shaman.
All right. Let's go on to number 4.
Okay.
Paying themselves through the business instead of a wage and then putting you with the big tax debt. Let's just talk about the paying themselves through the business instead of the wage. We hear of this a lot.
Yes.
Where their ex doesn't give themselves a wage. They just pay everything through the business. So
and they make,
one that causes trouble for child support because they say, I actually don't have an income. I don't. And so child support is like nil.
Right. And another thing they do, they might take some cash out, but call it drawings or directors. And that way they don't pay tax on it. And then what happens is, as it looks like they're going to court, so many times, suddenly they'll put their tax return in and, hey, presto, we've got a big tax debt. Now,
so that's standard procedure,
well,
isn't
it can be, yes. I've seen it a lot.
So how do people who know this is happening, how do they, let's focus on the child support bit and then we'll talk about the tax debt bit first. So how do they help themselves to get what's right for their children if their ex is in a $1 billion business or $1 million business but has no income?
Luckily, this is not the first time the agency will have come across it. So they have some protocols and there are grounds that you can use to appeal to get a change of assessment. And the ground that you'd be looking at is the one that says that their income, their current income, is not an accurate reflection of their resources and assets and property available to them. And then because the child support agency is a Commonwealth body and the tax department is a Commonwealth body, they share information like nobody's business. So they will be able to hunt down usually whatever companies they're associated with.
So the work that you've got to do is fill in that change of assessment form and give that reason and any information that you have, and that will usually come around and bite them in the bum.
That's right. And if you've done your searches, attach them. That will give it more gravitas.
Yes. Okay. Then the other side of that, the number 4, was paying themselves through the business instead of wage. And then all of a sudden they get a big tax debt.
Yes.
And then the tax debt goes into the asset pool, and
it has
it's
to.
sometimes the same amount as the whole property. We've heard that before.
Oh, we have, yes. So tax is tricky. Okay, so one point I want to raise with everybody, okay, if you're doing disclosure about anything, don't be palmed off with a notice of assessment. What you want is the actual tax return, and have a look at what their income actually is and how much. It has financial records attached as well if it's a business. Having that. Yes, they will. They'll pay themselves through the business without it going through as a wage. Suddenly you've got that tax debt. It's a liability. That used to be a grey area. It's not. It's a liability of the parties it goes in. What they do, though, is they have a look at that and how much of that tax debt arose during a time that you were still together and that both parties were getting the benefit of that money tax-free. If it's a respect and it really should have been paid when you were together, the court will say, no, that's got to be paid. It's a debt to the Commonwealth and you're both equally liable. What normally happens, though, that tax debt is a hybrid. Some of it's from before separation, some of it's after. In that case, the court will take into account the whole debt. But as for the part that's post-sep, that's really a kind of wastage or on the other person's part. So they'll get lumbered with that usually.
And if the debt's only after separation,
it's their problem. Yes.
Their problem.
Yes.
Okay. So I guess I know we're saying these things, but if you go to mediation, you've got to convince your ex. That's what will happen if you go to court.
Yeah.
So you've got to have your arguments clear and your information and documentation and cases ready to go.
I don't want to get anyone's hopes up, but last year there was a case where, I can't remember the name of it at the moment, where there was a tax debt incurred post-separation that was bigger than the property pool. And in this case, the court made the person who had incurred the debt, like who hadn't been paying, they made him wear that debt. He had to have that debt and give her everything else. When he appealed and said, it isn't fair, I shouldn't just be given a debt, the court said, we've got to look at the nature of that debt and you don't have to pay that all at once. You can enter into a payment arrangement with the tax department. You've got a big income. We think you can manage it, and end of. So I wouldn't rely on that. But if you're scrabbling help on that thing, that case may be helpful.
To have a look and find that case and put it in the notes. Just a reminder, we have a great episode on the weapons of tax destruction that we did with financial advisor Pedro Marin. He's got some great strategies that you can use if you're in a similar situation to that. I'll put that link in the show notes, so go and listen to that if you're really dealing with this tax issue. So next one, number 5, refusing valuations. So some of the basic steps we put in our course is go and get the business valued. And that would be then you put it into your asset pool so you've got it there so you can then do your percentages and figure it out.
Yep.
But valuations can be a freaking nightmare. So they refuse getting the business valued. They refuse it.
Yes. Okay, so there are times when you may have to waive the notice of intention to file in front of them.
So a notice of intention to file is if you don't do what we need to get done, I will have to take it to court.
Yes, and don't let them string it out too long. Because sometimes they are doing dodgy stuff with the business while you
all these other things.
Yeah, like all of these other things. You're giving them time. You're giving them. But one thing that they'll often do is delay disclosure. And I think we've got listeners who are tearing their hair out about they haven't got disclosure about this. Good news. You don't need full disclosure about the business. Okay, I'll say that again. You don't need full disclosure about the business before you can proceed. Because you can send a value in, they're going to look at all the documents anyway at the place, and they're going to go through all the records and give a report and come up with a number. Now, that number is all the judges are interested in. So you can plug it into the property pool. The house is worth this, the business is. So you can, but they can stall on delivering disclosure about the business, and people think they can't go any further without it. So then if that's happening, if you want to get the business valued and they're mucking around, promptly send them a list of 3 valuers, get them to choose one. If they don't choose one, then send a notice of intention to file in the court, and the order that you would be seeking on the first return date is that a valuer be appointed to value the business.
I'm just going to say, disclaimer here, Mum is not your lawyer. She doesn't know your situation. Please always get legal advice before you do any of these things. This is just what Mum would do in a hypothetical.
Yes.
If someone was going through this as a client, knowing all of their circumstances. Okay, so that usually pushes them over the edge to get it done?
Yes, you send the central practice direction as well, and there are penalties if someone is not cooperating in and taking genuine steps to resolve the issue. So you would probably be asking for costs if you go. Now, what would happen normally is the lawyer on the other side, if they've got one, goes, oh, mate, we're trapped. Yes, we've got 3 valuers. You better choose one. You have to get it valued. If not, I think they mean it. They're going to go to court.
So just to highlight what Mum said, you don't need the disclosure of the business because the judge is only going to look at the value of the business anyway. So stop wasting time on doing that. Get legal advice though. And Mum said it's a better way around it. It's just get a valuation of it and then it's in the asset pool and you can start the negotiations.
And because the valuers go in and they will be shown all of the documents, particularly if it's a court order. But if they hit any brick walls or are suspicious, they will put that in a letter to the court or a letter to you saying, I'd like to have valued this. The woman refused to let me look at that. Something like that. So there's some.
So it's better to do that sooner than let it delay for a long time so they don't do all these other things.
I think so. It's really hard to unpack something if a business has been running for 8 years.
All right. Number 6.
Yes.
Cooking the books or having a second set of books. You're invited to our free webinar. Whether you're stuck at the beginning of deciding to divorce or you're struggling to find your way through the legal jargon and fear of the unknown of the legal process, we are here to empower you to take control. Join us to learn what steps you can take, followed by a live Q&A where you get Lynn, my amazing mum, and family law accredited specialist to answer your questions. All you have to do is go to www.thedivorcecourse.com.au and click on Reserve My Seat. We'll see you there. Hurry, spaces are limited, so don't miss out. Register today. All right, number 6.
Yes.
Cooking the books or having a second set of books, or even, I'm just going to say, I know it's still a bit different, but cash in hand as well.
Doing cashies. Yep.
Yeah.
The black market.
So what do people do if their ex is cooking the books and they know it?
Send a valuer in. Okay, so there's that famous case of Weir, where the valuers go into this gravel business and the records were there given to them, the whole set of books. But when they looked at the gravel pit, it had a hole in it that was about $100,000 worth of gravel that wasn't in the books, right? And so either there was another set of books or maybe the people who came in, look, don't pay me till after the whatever in November when they're aware of that. And so the court, they can look at that and shenanigans. If your ex had a habit of doing cash work, going through the relationship, now this is controversial. If you think they're still doing it, fine. But if you refer back to cash that was taken during the relationship, that's money on which tax should have been paid. And don't be surprised if the court says, hang on, we're going to stop this. We're going to send it up tax ATO, let them work out what the tax is due and owing, and then when bring it back, then we'll know what the property pool is. And so nobody really wins with that.
What if they're only doing cash after breakup?
Oh, dob them in.
How do you prove that, though?
Again, same with Mr. Weir. The stock's gone or the hours have been worked. So I remember one tradesman and he said income was really down, but his individual subcontractors were sending in accounts for hours worked. So it was easy to see that he was paying them for a certain number of hours. Obviously, he was getting...
Right.
So it's just needs a little bit of a forensic eye. Valuers have quite a bit of power when they're by agreement. You'll write a joint letter to them and they'll dig all this stuff up.
If you're worried that your ex has second books or is doing cash in hand, usually those smaller ones that do like the tradies that do cash in hand and stuff, usually the other person is somehow involved in the business in some way. Is it a better idea before you go, or if you've still got access, to download copies of the books or get some proof of what is going on originally? So even after you've left, you can say, this is what was happening before we left.
Particularly if you're working in it. Yeah.
And then what you say, can you explain why it's no longer like this? Is that what lawyers do?
That's a good example. But we would be asking the valuer why things are no longer.
Okay. So that's a way around it.
Yes. And another rider on this too is you may own a half share of a business. That business may be nothing more really than a job for the person. So some jobs, they don't want to hire employees. They want you to have your own business. So you set up a business, you set up the GST. But in reality, it's just a job for one person. If that's all it is, then it's really only the value of the assets, the trucks and cars and so forth, that come into play on a valuation of the business. So be realistic. If you think the business has value and it's worth getting a value in, then do that by all means. But just for sometimes if there's no goodwill, then it really is just the value of the assets. The thing is, if you've got a job where you've got all this, but they're not written down, they're hand deals, and this person is the linchpin, it may be that it doesn't have a saleable value, but it will have something that valuers call value to owner.
So the thing that really annoys me, and I know we're only up to number 6, we're about to go to number 7, it's so much extra work for the good person who's not doing the bad stuff to have to deal with this crap. So if you're listening and you're like, oh my gosh, I wish there was an easy solution, I am sorry. But I guess the only way I can think around this is to say, yes, you've got to do some extra work, but it will pay off if you get a better percentage in your property settlement.
More money in the hand.
So this is another situation that we're hearing about a fair bit. This is when the exes are working together. They're in the business. Like maybe it was a husband-wife team or a wife team or whatever, and they're somehow both in the business. And they get sacked.
Yes.
Or they're told they can't come back.
Yes. And then the money gets cut off.
So they've lost their income.
Yes.
And they've lost access to the business. And they're getting divorced. So how can people deal with this sort of stuff?
I think you need to ask them to reinstate the payment as a spousal maintenance payment because you're dependent on them post-separation. And don't forget to look at Section 4AB of the Family Law Act, which sets out a definition of financial abuse. And what you said, sort of sacking and pulling the rug out, is absolutely spot on for financial abuse. So that you can be sure that the court's going to look at that and see whether you should get a bigger percentage of the property pool as a result of their actions post-separation.
So you could print out the definition of family violence and say, if you sack me, this is what you're doing.
Well, you've sacked me against my wishes. I need money to live on and request that it be paid as spousal maintenance, which means it's not tax deductible. And if not, then you are committing family violence as set out in Section 4AB, example, whatever it is. I can't remember all the letters, but there's some great examples.
Perfect. And look, on the bright side, then you don't have to work with them, but you're still getting paid till you get property settlement. So it'll make them hustle to get your property settlement done.
Yes. And
at
the time, people split money in businesses for tax purposes, but who don't actually see this money. That's another aspect there for you.
Yes. And I guess let's quickly talk about that because we did have a question recently where their ex they'd always on their tax returns said they earned heaps of money, but it was just their ex putting the money into their account so that they could avoid the tax threshold, I believe, or whatever it was. Is there anything they can do about that?
History doesn't really matter, I guess. Yeah. But if they suddenly stop making the payment to you, your argument will be that the person, your ex, is now getting your income and their income combined. So they're in a much, much better position than their tax returns would show. So you could add yours to them and that's their ongoing income.
Perfect.
And if they say, oh, but I have to hire someone now to do your job, it's very interesting to know what they're paying the person that is replacing you. And you can ask for disclosure about that. And that gives weight to your argument about what your value to the business was going forward.
Perfect. Okay. All right. The next one, number 8, is getting the staff against you.
Yeah.
So turning the staff against you. And I have heard this. They do stay in the business. They keep working because they're stuck in it together. And a lot of people do, I guess, when you've got a house, you've got kids, you've got a business, it's all intermeshed. And so a lot of people, they stay in the same house, they stay in the same business. They just no one knows how to get out of it. So they don't sack them in this case. They just turn everybody against you, and it's workplace bullying at its finest, I would guess.
It is.
How can people preempt that, and what can people do to deal with that?
So this is general advice only, okay, depending on...
It's not even advice.
It's not even advice.
Education.
General education, options.
Just a discussion.
Maybe discussion. Okay. You could be sick for a long time, calling in sick week after week. You can call on your long service leave. They have to pay you that in a lump. If you resign, for instance, you get your long service leave.
So if you're being workplace bullied, it'd be valid to not turn up because your mental health is suffering.
Absolutely. Yep. Or you can work from home. Because you presumably are also an owner of the business, you have a lot more heft, a lot more things that you do without fearing that you won't get a share of the business. I do know, I've heard of some people who stay in the business to make sure their ex doesn't do anything dodgy.
Yes.
Yes. But that is a trap, isn't it? So you do need to try and unpick the relationship and let them go on their merry way, and you just get your cash and go.
Yeah. In those instances, I think getting your property settlement as soon as possible is better. But sometimes it's the mental calculations people have to do in their heads to let go of a business that maybe they've always done, or the same way people have to let go of houses they've always lived in. And it's an emotional journey before people are ready to do the practical side
and
of
also, too, you're going to court probably, or you're fighting over the kids as well. So there's that stress. A lot of people think they have to go to forensic accountants to sort out what's going on with the business. Be very thoughtful. And I wouldn't do that unless the valuer says.
Okay. Now, we've got number 9, which we've already talked about, not paying tax and then putting it all once in the spreadsheet as a massive debt. So we've talked about that, and that is basically, if it's after separation, then you can try and argue that it's their problem. Okay.
Yeah. It goes to people, but they get an adjustment against them as they take the liability for the debt. Okay.
And then number 10, self-managed super funds. So a lot of people with businesses also have self-managed super funds, and they all of a sudden become non-compliant, or they don't do the disclosure when they go, I need to know how much is in that, or they just start doing stupid things with it.
Yeah. Or they set up a mirror one and move their share over into another super fund. Can do that. Yep.
Okay. So what can people do to protect themselves if their ex has a self-managed super fund and is doing silly business?
Yes. If usually the self-managed super funds will have both of you, it's unlikely that just one person has a superannuation interest in it because of dividing for tax purposes and so forth. You probably will find got an interest in that self-managed super fund. And so you're next on the line if they're doing the wrong thing and are being with all of the rules and regulations. You can be sure that if you end up in court, then the court will refer the matter to the tax department and whoever else needs to know about it to make sure that the superannuation fund has paid all of its debts before it comes back to the judge. So one thing you can do is ask for your share of the super fund to be rolled out, another superannuation into one of the big ones, right? Not just a personal one. I think self-managed super funds post-separation are really fraught with worry, and it's a good idea if you can, I think, usually, to get your money out and put it somewhere else. Where you get problems is where the superannuation fund owns maybe the building the business goes in. That's a very common one. Or it owns a home. And you can't get to the Australian Retirement Trust or something. Hey, can you just transfer half home into yours? So at the time, the assets of a self-managed super fund, a percentage of it always has to be in cash, and that'll be an element of it. But often you need to get more. Somehow sell something for you to get more, but can roll out. You will usually have an interest in there. Try and roll it out, I suggest. And then it's another one where you shouldn't let it go on too long because of the liability that you have as well.
So in our course, we show you how to find out what's in your ex's super and do that yourself. Can people follow that same process to get the self-managed fund information?
Yes, you can. So generally, the business mum and dad, they don't completely run the self-managed super fund, right? It's tricky. And so they've got an accountant who does all of that. So you can send the superannuation information form. You can't send it to the accountant per se. You've got to find out who the trustee is and send it to the trustee of the fund.
And you can do that through, is it ABN lookup?
It's a hard way to find it. You will know if there's a super fund that's been in existence during the relationship, you will usually know. If you don't know who it is or what it is, you may need to go and have a look in your accountant's office, ask them to see you, ask them to tell you about your self-managed super fund. If they won't, and sometimes they won't, once the separation's declared, they won't see you, then get your own accountant to go and have a look at that. Find out who the trustee is, and then send the superannuation information form, Form 6 or SIF for everyone except West Australia, I think, and send that form to the trustee, and they have to answer a whole about the trust. Where I come into these searches, Laura, with ABN lookup, if I suspect that someone has set up a superannuation fund, because it's a trustee, the trustee of the superannuation fund sometimes is registered for GST. So you can go the trustee of and put his name or their surname or whatever, and then have a look down and see if any of the superannuation funds that come up have like your postcode or look familiar or have initials. So you can identify perhaps this is the one. You click on that and it'll tell you when they started it. And of course, all the red flags come up when they started it just on separation and that. So if you're in course, you can use the court portal to check on their super funds. But self-managed super is tricky and you really need to have an accountant on your side.
So of all these 10 tricks, I'm sure there's going to be many more that people can write in or comment below and let us know what other tricks people have used in the past. But the positive side to this is there's ways around the drama. And Mum, if these people end up in court being busted for doing these, what are the ramifications for them?
Well, ramifications may include cost orders against them if you've had to go to court to force them to do the right thing. At the end of the day, end of the trial, court case, right, when you go before the judge for a final hearing, the court will look at their behaviour through the relationship. And I'm tipping, here's a hot tip, I'm tipping that they will start adjusting percentages against the person who's made the process very expensive for the other, for non-cooperation, right? And they conducted themselves. I think at the trial, I think that will come up. And they may also get just straight out cost orders.
Right.
And remember, it's hard to say exactly what percentage a person is in a property distribution because it depends on how the evidence comes out and the judge on the day and so forth. But if you've got if your ex has been playing up all the way along, then the court, when a judge thinks of the range of what percentage you should get or they should get, I think they're going to go for the higher side for you and the lower side for them of dealing with that bad behaviour.
And you've got that case of Sharman and Sharman where they gave the wife pretty much everything that was left because the ex did so many stupid things.
And then hit him up for costs as well.
Yeah, and I think a lot of people might not ever go to court, so you need to make sure you've got these arguments down pat so that you can say, look, this is why I want a bigger percentage or we're going to go to court. But also, I think the other message you wanted to get out there is if your ex is doing these things and it's dragging on, going to court sometimes is the better option because once the money is gone, sometimes, like the Shinohara case says, if they only deal with the money that exists in the pool. So unless you can prove where it's gone and where it is. I think so going to court faster sometimes is better.
Or at least forcing that valuation.
Yeah.
One thing I forgot to mention, another trick people do in valuations of the business is they try to say that that big truck, right, that it's been written down over 10 years and on the books it's only worth $20,000, but actually you could sell it for much more, right? And so when the depreciated values as set out in their tax returns doesn't always reflect the actual value of the assets. So if there's no way of valuing the whole business, if they have to value the assets, or if they do value the assets, then they should be looking at what they could get for it.
Not just what's written in the depreciated value. Okay, that's a good tip. Now, Mum, what can we embroider on a cushion for people going through this?
Discovery, not disclosure.
Discovery, not disclosure. Perfect. And if you would like to learn more about how to do your own discovery instead of sitting and waiting for your delaying ex to do disclosure, you can go and listen to our DIY disclosure episode. I'll put that link in the show notes as well. But yeah, big hugs to anyone who's dealing with this shenanigans. But don't worry, the court's alive to it. Lawyers should be aware of it, and there are ways to be organised. And again, before you go, make sure you get a copy of this if you can. Download it. Try and get as much of this before you go, if you can.
And take that central practice direction and rub their noses in it if they're not following the core principles, which is the disposal of a property case according to law.
Perfect. All right. We should get that one embroidered on a cushion and send that to your ex. Yeah. So every month we are also doing a free call to mum for someone who's written us a review. And we've got some great reviews to go through this week. So the person that we are giving the free call to is Scrange36 in Australia. She wrote a lovely review to us and she said, I have a pretty bad situation, narcissistic ex, who's currently in rehab and was in jail, and I just didn't know where to start. Thank God for these two angels. I'm so glad I was put into this podcast. They help when they really don't need to. Thanks so much. So if that is you and you are listening, then please give us an email at thedivorcecourspodcast@gmail.com and we will be able to link you up with a free call with Mum.
That's all lovely. Right. I look forward to talking to them.
Okay. Thanks, Mum, and see you guys all next week.
Bye, Laura. Bye, everyone.
If you found this podcast helpful, we'd love it if you could rate, review and subscribe. By doing so, you are spreading the word to help someone else just like you. Lynn would like to remind you that this podcast is general advice only and you should always get legal advice in relation to your particular situation. And remember that the Australian laws may have changed since recording